Yeah, absolutely. First of all, it is something that the Bitcoin community needs to focus on because it is slowing down institutional allocations. It's not stopping them, but towards your question, they want good answers. We often point them to this incredible paper that the Presidio Bitcoin Initiative put out on quantum. The thing to understand about quantum, it's not a fundamental risk to all of Bitcoin. It's a risk to certain wallets. There are hard questions that the Bitcoin community needs to answer. But the really positive thing, in part because we've had real market leaders like Nick Carter pointing attention to this, is that the developer community is now focused on it. We've seen an acceleration of proposals to solve it. We see the community addressing these problems. It's a funny problem. It's a problem that if you don't monitor it, becomes a really big issue for Bitcoin. If you're worried about it and focused on it and address it, I think the community can solve it. When we explain that to people, they gain comfort and it's not stopping their allocation. But as I said, it is slowing it down. It is something the community needs to focus on for sure.
One of the most transformative developments in Bitcoin's history has been the rise of spot ETFs. Hougan emphasizes a simple but powerful truth. When you make Bitcoin easy to access through low-cost, regulated investment vehicles, investors show up. There was once skepticism about whether the market needed multiple Bitcoin ETFs. That question has now been answered. Not only is there demand, it appears to be nearly insatiable, particularly among institutional investors. Major players like BlackRock and Morgan Stanley entering the space isn't just validation, it's acceleration. Each new ETF lowers barriers, expands distribution, and brings Bitcoin into portfolios that previously couldn't access it. Hougan expects this trend to continue, with inflows growing and the total addressable market reaching into the hundreds of billions of dollars. And importantly, competition is not a weakness, it's a strength. Different investors will choose different providers. Some will favor large traditional asset managers, while others will seek out crypto-native specialists like Bitwise. This diversity of options strengthens the ecosystem as a whole.
Look, I think it's really exciting to see Bitcoin here at 75,000. The fact that we've been able to hold these levels is really appealing. There is this question of whether we're in a channel or whether we can break out to the upside. If we can break out to the upside at a time that funding rates are so negative, I think that's an extraordinarily positive story, and there's probably upside volatility for us. So I'm just sort of watching and waiting and looking at prices just like everyone else. Of course, I also have an eye on the rumors about the Clarity Act. There's certainly a lot of chatter about that. I think if we can line up passage of the Clarity Act, pretty strong price performance, improvement on the quantum side, I think it's going to be a pretty exciting Q2. Maybe the spring will arrive early. Yeah, it tells us a repeat of the story that we've known, which is when you provide easy, low-cost exposure to Bitcoin in an ETF wrapper, people are excited about it. It's one more data point that convinces me that the wave of institutional capital coming into Bitcoin is just going to build from here, right? Did we need another Bitcoin ETF? People wondered. It turns out the answer is yes. I think there's a nearly insatiable long-term appetite for exposure to Bitcoin in institutional portfolios. I expect Morgan Stanley's product to be successful. I expect the other ETFs to continue bringing in inflow. So I think it's just a great sign long-term for Bitcoin. Yeah, look, Morgan Stanley is an absolutely incredible firm, and that's an incredible price point. I think it's broadly good for the market to have multiple solutions. The reason people turn towards Bitwise, which has a low-cost offering at 20 basis points, is they want a specialist crypto asset manager that does this 24/7, 365, that has a 18-person research team there to answer their questions about crypto. People are going to choose different solutions. Some may go with BlackRock, the world's largest asset manager. Some may go with Morgan Stanley, which is an incredible firm with this low-cost ETF. And some want a specialist. Bitwise is proud to be, the leading crypto specialist with an ETP in the market. I think we're going to win our fair share of what's going to be a market measured in the hundreds of billions of dollars. So I welcome Morgan Stanley into fold. We'll compete with them on Bitcoin. We also have other products, a broader suite within crypto. I think we're going to be just fine. Yeah, the answer is absolutely more sophisticated and more. One of the promise Bitwise makes is anyone can ask our research team a question. We'll get back to them within 24 hours. It used to be basic questions about Bitcoin, and they would trickle in one or maybe two a day. Now it's 4, 5, 6. They're asking questions about stable coins. They're asking questions about tokenization. They want to know about things like Avalanche and Canton. They want to know whether L1s can accrue value or not, whether it's going to be a commodity market. They want to know the latest on quantum and Bitcoin. The scale of the questions that we're getting asked are just at a much deeper level. It shows a greater maturation in the market. It makes me very bullish to see those questions trickle in every day, because after a question comes in a few days later, it often turns into client flows. Yeah, absolutely. First of all, it is something that the Bitcoin community needs to focus on because it is slowing down institutional allocations. It's not stopping them, but towards your question, they want good answers. We often point them to this incredible paper that the Presidio Bitcoin initiative put out on quantum. The thing to understand about quantum, it's not a fundamental risk to all of Bitcoin. It's a risk to certain wallets. There are hard questions that the Bitcoin community needs to answer. But the really positive thing, in part because we've had real market leaders like Nick Carter pointing attention to this, is that the developer community is now focused on it. We've seen an acceleration of proposals to solve it. We see the community addressing these problems. It's a funny problem. It's a problem that if you don't monitor it, becomes a really big issue for Bitcoin. If you're worried about it and focused on it and address it, I think the community can solve it. When we explain that to people, they gain comfort and it's not stopping their allocation. But as I said, it is slowing it down. It is something the community needs to focus on for sure. I think it's extraordinarily bullish for the long-term trajectory of Bitcoin that it's performed so well during this conflict. I've always thought of Bitcoin as two things. It's a store of value like gold, and then it has effectively an out-of-the-money call option on becoming a tool for international commerce, a way for countries to settle transactions using an apolitical rail. But it's been an out-of-the-money call option because for most of Bitcoin's history, that just seemed really unlikely. Until the Russia-Ukraine war started, we were in a dollar-only world. Since then, it's been basically dollar yuan. That's been the settlement rails. But what we saw in Iran is a country sort of point towards Bitcoin as a potential solution. Now, there are all sorts of reasons to be concerned about that, from sanctions and money laundering. There are things for us to focus on. But what it shows is that the increasingly fractious world and the increasing changes to the global monetary order have opened up a space for Bitcoin. And if Bitcoin can be both a store of value and an actual currency, then the price targets we've been talking about, and at Bitwise, we've been talking about, $1.3 million by 2035. I think you have to ratchet that up, maybe another $1 million increment, because that's a huge addressable market. I think it's directly the reason we've been rallying through this Iran conflict, and it makes me very optimistic long-term for where Bitcoin's headed. No, I just absolutely love that example because that's exactly right. In a normal status quo, there is no opportunity for Bitcoin to break into this exclusive club of the dollar and the yuan being the settlement rails. But when you get these shock moments, like the Canadian truckers strike, like this challenging geopolitical event that exists between the US and China, right? Literally in the middle from a geographic perspective, that's what opens things up. My piece was called, Chaos is a Ladder, because you need those events to make space for Bitcoin to sort of wedge its way into the conversation. So I just thought that was a really great example you raised.
Perhaps the most fascinating part of Hougan's analysis is Bitcoin's evolving role in the global financial system. Traditionally, Bitcoin has been viewed as digital gold, a store of value. But Hougan suggests there's a second, often overlooked dimension: Bitcoin as a potential neutral settlement layer for international transactions. For most of its history, this idea seemed far-fetched. The world operated largely on a US dollar-based system. But recent geopolitical shifts, such as the Russia-Ukraine conflict and tensions involving Iran, have begun to challenge that structure. In these moments of instability, new possibilities emerge. Hougan describes this dynamic with a striking idea: chaos is a ladder. When traditional systems are disrupted, alternative systems like Bitcoin have to enter the conversation. And if Bitcoin begins to gain traction, not just as a store of value, but as a functional currency for global settlement, the implications are enormous. Bitwise has previously projected a long-term Bitcoin price target of around $1.3 million by 2035. But if this monetary role expands, Hougan suggests even that estimate may be conservative.
Well, look, I'm not sure that they get worse. You need these shock events to open the door, but then once you normalize the asset, it can find more normal use cases. I come from the ETF industry, as you know. Really, bond ETFs were not that popular until the global financial crisis, when bond mutual funds stopped working because there was no underlying liquidity. But bond ETFs really did work, and the market sort of shifted towards that. We're actually seeing something similar with hyperliquid and real world assets, where the fact that the Iran war conflict started on a Saturday when the CME was closed forced people to consider hyperliquid. But once you open the door through those shock events, you can get more normalized use. So look, I actually think an apolitical currency is extraordinarily good for the world. Does it raise issues that we need to deal with? Absolutely. But I think it's good for the world. So once you open the door, I think it's natural to spread it in. It's just hard to get that first step through. I think this is an example of us getting that breakthrough. So no, the world doesn't have to get terrible for Bitcoin to succeed. Quite the contrary. I think Bitcoin will make the world a better place long term, but we do need these shock events to open the window for us to get a seat at the table. Yeah, I mean, what we talked about in our long-term capital market assumptions is that all you need to get to $1 million Bitcoin is for the store of value market to continue to grow the way it's been growing for the last 20 years. That market has grown at a 12% CAGR for the last 20 years. If that continues for the next 10 years and Bitcoin ends up with like 15, 17% of the market, it's at 6% today, you're talking about $1 million Bitcoin. So you don't need much to get there over a 10-year period. In terms of what could accelerate that time frame, things like what happened recently, where Bitcoin as a currency finds space in the world, could significantly accelerate that. Progress on the regulatory front, if we do get good news on the Clarity Act, that would significantly accelerate that. But I don't think that much has to happen in order for us to get to that $1 million price target within 10 years. Again, just the market continues to need to go in the direction it's been going for the last 10 years. If you extrapolate that trend, I think we'll get there. Yeah, absolutely. BAVA, BAVA is our Avalanche ETF. It holds Avalanche in qualified custody and then stakes the maximum percentage it can while still retaining the liquidity to function as an ETF. That's about 70% of assets staked. So we're really doing our best to maximize the yield you can get from staking. Look, the L1 space is extraordinarily crowded. What we do at Bitwise is we scan the horizon to see which projects have really differentiated architectures that are finding meaningful traction. Certainly Ethereum is one of those. We have an Ethereum ETF, ETH. Solana is one of those. We're very proud of BSOL, the largest Solana ETF. Avalanche is interesting because it offers customizable L1s for enterprises. I think that's a very differentiated L1 architecture. So we're very excited to bring BAVA to market and give people sort of a choice among the most interesting designs in the L1 space. Yeah, look, the reality of the L1 space is the thing that I'm confident in personally is that demand for L1 high quality block space will grow, right? The growth of stablecoins and tokenization, I think, are fait accompli, moving to trillions of dollars in market cap. The things that we don't know is which L1 structure will win, right? Will it be the fully decentralized Ethereum structure, the more centralized Solana structure, or this Avalanche with new L1s, Avalanche L1s, they're called now post subnet branding? We don't know. So the bear case is that maybe this more customizable structure doesn't win in the market. It's been doing really well, right? Real world assets on Avalanche are up 950% in the last year. So it's been doing really well. But any honest appraisal says we're still at the early stage in the growth of L1s. And so knowing which architecture will win is hard. From my personal perspective, that means I own all of them, but different people will make different bets, and it's entirely possible that a different architecture will win. I just think Avalanche's approach resonates with mainstream firms moving into the blockchain space and the introduction of real world assets. So I think it has a real shot, but it doesn't have a guarantee that it will win. Yeah, well, look, that they're all the same, right? That's the most important one. There are three big questions you need to focus on when you look at staked ETFs. What percentage of the assets are staked at any given time? What percentage of the stake does the asset manager take, which as opposed to grant to shareholders? And then how high quality is the staking operation? Bitwise is one of the largest staking firms in the world now through our acquisitions of Attested and Chorus One. We have a great deal of staking expertise, but you can't assume that these are the same. If you look at the Bitcoin ETFs, right, you're really looking at very similar ETFs. When you get down to staking, you have to look at, again, the quality of the staking, how much is staked, and what the percentage split is between the asset manager and the investor. You want all that to be on your side as an investor. I think when you do that across the spectrum of these ETFs, Bitwise does very well. That's why we've done so well on the Solana side, why I think we'll do so well on the Avalanche side as well. Yeah, absolutely. Vis-a-vis Hyperliquid itself, I don't think it's that they want to. I think it's that they have to be able to trade. You can't be a global macro hedge fund or a leading investor and not be able to respond to geopolitical events on Saturday. And right now, Hyperliquid is basically the only game in town. So they're being forced to onboard into this ecosystem. Look, I think Hyperliquid is part of a new generation of DeFi projects that are built after the regulatory environment improved, that allow for real value capture, that have rethought how the token economics work. It's having massive success. I can't speak to our Hyperliquid filing beyond the fact that we have filed for a project because we're in sort of the SEC's quiet period on that. But I will say, look, Hyperliquid is obviously one of the best performing crypto assets over the last whatever time period you want to look. It's got an incredible founder. It's found product market fit. It has good tokenomics. I think there's a reason a lot of people are excited about it. I'm hopeful. I'm not bullish on anything in Washington, and everything can break. But the most recent spat of rumors has been more positive than I expected. So put me down as hopeful, but you always have to treat DC with a bit of skepticism. I wouldn't count those chickens until they're fully hatched and indeed signed into law.
Bitcoin today is no longer an experiment. It's an evolving financial asset embedded in a complex global system. From ETF-driven institutional inflows to the possibility of becoming a neutral global currency, the forces shaping Bitcoin's future are stronger and more diverse than ever before. Short-term volatility will always be part of the journey. Regulatory uncertainty, technological risks, and market competition remain real challenges. But the long-term trajectory, as outlined by Matt Hougan, suggests a powerful convergence of trends that could redefine how we think about money, value, and global finance. The question is no longer whether Bitcoin belongs in the conversation.